Hey there, this is Arthur Hill, Chief Technical Strategist with TrendInvestorPro.com. It is Friday, October 31st, and you are tuned into the Halloween edition of the Friday Chart Fix. Thank you very much for joining us. So we're going to start off with the MAG7 and show you the influence of those 7 stocks on the S&P 500. These 7 are powering the market, at least the S&P 500, higher, and they're part of the market, so we cannot ignore them. We'll look at the MAG7 ETF MAGS. It's hitting a new high after that flag breakout. We pointed out that flag on the 17th of October. And then we're going to look within the NASDAQ 100 because you think it's just about the MAG7. Well, that's not quite true because within the NASDAQ 100, majority of stocks are still in long-term uptrends and we see more new highs than new lows. So I don't see any breakdown in breadth yet. And then we're going to look at the Qs because I'm a bit concerned just because they become overbought with a 2 standard deviation move above the 200-day. So here is a performance chart showing the percentage change for SPY, QQQ, and the MAG7 stocks over the last 6 months. It goes from basically May 1st to October 30th. And we can see here SPY's up a respectable 22.59%. QQQ outperforming up over 30%. And then we can see the MAG7 with 3 standout leaders. NVIDIA up 86%, Alphabet up 77%, and Tesla up 56%. So clearly when you have these outsized moves in the bigger stocks within the S&P 500, you're going to power the S&P 500 higher. In fact, these 7 stocks account for 38.5% of the S&P 500. So if you're ignoring these 7 stocks in the MAG7, then you're ignoring basically a big influence on the market at your own peril. They are part of the market and we've got to accept that. They are driving the S&P 500 higher, and until they break down, the chances of a correction in the S&P 500 are fairly minimal, with 38% of the weighting coming from these 7. We can also see Apple and Microsoft up respectable. Amazon's only up 20%, but this does not include the price action on the 31st. Amazon's up over 10% with this, so it's moving higher. Meta took a big hit. It's only up 21% the last 6 months. It's perhaps now the weakest because it's below its 200-day moving average. But overall, the MAG7 looks good, and we'll look at that chart next. So here is the MAG7 ETF, and it is in a steady uptrend with a fresh new high here this week in October. There we can see that big move up in May. And since May, it's just worked its way higher with steady advances. You had a pennant there in August and a breakout. And then we got a flag here in September, October. And with that long black candlestick, we became oversold because you closed below the lower Bollinger Band. And this is kind of a mean reversion setup because that lower band is 2 standard deviations below the 20-day moving average. And when you get below the lower band, that means you've pulled that rubber band back and you expect at least a snap back towards the mean, which is the middle of the 20-day moving average, or even higher. And when that pattern formed, we could draw a falling flag, which is a bullish continuation pattern. We had the sharp advance, the falling flag, and then we got the breakout there with the move above that high. And that was bullish, and we moved to new highs. So this one is in the middle of a trend. There's no setup here. If you look at the indicator window, we got %B, and it goes below 0 to signal an oversold condition. And when it goes below 0, that means the close was below the lower Bollinger Band. But with MAG7 hitting a 52-week high, we are in a confirmed uptrend for perhaps the most important ETF in the stock market, at least as far as SPY and QQQ are concerned. So you might say, what about breadth? Isn't breadth underperforming? Aren't we seeing weakness within the market, within the S&P 500, within the NASDAQ 100? Well, yeah, the NASDAQ 100, you look within, and you still have a large percentage of stocks in long-term downtrends below their 200-day moving averages. But you know what? The majority are above their 200-day moving averages. And as long as the majority are above their 200-day moving averages, that is a net positive for the NASDAQ 100. It means we have to be selective. if you look at this indicator here, this is NASDAQ 100% above 200-day moving average here. And you can see it got that big surge in May, and it's hovered above that 50% level since the middle part of May. You had a big dip in July, but you're hovering above 50% in net bullish, and we're at 57% on the close, or that was the morning of October 31st on Friday. So that is still net bullish. I mean, we still have the vast majority of stocks in long-term uptrends within the NASDAQ 100. So it isn't just QQQ. It's not just the MAG7, all right? It's stocks within the NASDAQ 100. Now, admittedly, 43% of stocks are below the 200-day, and you can choose what to focus on. You can focus on that, or you can focus on the winners, the leaders, which are above their 200-day, and like the MAG7, like I showed you here. But this one is still bullish. If you look at high-low percent, which is the percentage of new highs less the percentage of new lows, it hit 15% this week. That's the highest level since this advance began, since we turned bullish there in the middle of May. And we can see here that we've had a couple, well, several, 1, 2, 3, 4, 5 days when this indicator turned negative. That means there were more new lows than new highs. But these days didn't last long. They weren't significant. So we haven't seen any expansion of new lows, and new highs continue to outpace new lows. And so that's why I think a breadth is net bullish for the NASDAQ 100. Now, it's important when you have breadth indicators that you set your key levels upon which they would turn bearish, because we did get bearish signals from these breadth indicators in March. So this report is part one of a two-part series where I'm going to talk about the breadth indicators, and also in a minute I'm going to talk about the overbought conditions in QQQ, because it's 2 standard deviations above the 200-day moving average. And then in part two, what I'm going to cover is those key levels to watch for the breadth indicators, because you need levels that are going to signal a material shift in participation. You want to avoid whipsaws, and you want to look for that material shift like we saw in March. And so I'll show you those key levels in part two. And also in part two, I'm going to show you the signal to look for, because you can become overbought and remain overbought. And that's what's happened basically with the Qs. And so they became overbought, they remain overbought, but I'm going to show you my preferred momentum oscillator to use to signal a shift in downside momentum, a shift from upside to downside that could foreshadow a correction. And it foreshadowed extended corrections in 2025, that one we had in January to March, early April, and also one earlier in 2023. So check out TrendInvestorPro.com if you would like to see part two of this report, which also includes a video. You can also see some of the reports we did earlier this week. We had an oversold setup for gold. We've got uptrends extending for uranium, base metals leading. Here we covered our breadth models, which go into detail for SPY, QQQ, and the S&P 1500. We had our stock setups, and we also had an oversold setup in Newmont Mining, and it's getting a nice bounce. And we're staying the course as far as the equity market is concerned, with leadership coming from tech and QQQ. So again, check out TrendInvestorPro.com. Take a trial to get immediate and full access. So here's the chart for QQQ, and it shows my reason for caution. And when I say caution, I mean we've got the yellow flag out. We don't have the red flag out, or the red light that says, hey, I think we're moving lower. And the reason I've got the caution flag out, or caution signal out, is because we've become overbought. We're 2 standard deviations above the 200-day moving average. So this is Bollinger Bands in blue. That middle line is a 200-day moving average, and the outer lines are 2 standard deviations above and below. So obviously you've had a significant move when you move above or below those upper or lower lines. But you can see here, as we did in May 18th, we got above the upper line. That's the initial cross above the upper Bollinger Band. And we continued higher for 2 more months after that. And then we got the correction. And if you look here in January 19th, we got back above and we continued higher for another 2 months. And then we got a pullback. See, this is a correction because you can see it extended a few months. And this is a short pullback because it was around a month. Then we got another move above the upper Bollinger Band. And then about a month later, we got the pullback. And that was a pretty sharp pullback towards the 200-day there in August of 2024. Then on November 7th, we got above the upper Bollinger Band. We continued higher for about a month and a half and kind of flat. And then we had a correction. That was the deep correction into March. And we had a bear market signal actually in mid-March. And then the plunge into April. And then we get above the upper Bollinger Band there on July 3rd. And we've just continued higher. And this is a classic case of becoming overbought and remaining overbought. But if I look at this current overbought condition, it basically started on July 3rd, and it's currently going on for 4 months. July, August, September, October. So this is one of the longer extended periods that we've had without a bearish signal to signal that we're going to get a correction. And as I said, to get a signal for a correction, you either have to watch the charts and look for some sort of a breakdown, which you can see some support breaks if you look close enough, or you can use a momentum indicator. And that's what I'm going to show in part 2, a momentum oscillator that will show you when you get that downward shift. It kind of quantifies that downward shift in momentum that signals a pullback or correction. It foreshadowed this correction here. It foreshadowed this correction and this bear market signal here. And it also foreshadowed the August correction. It was a little bit late on this one, but it was ahead. It didn't happen at the bottom. But I'll be watching that indicator going forward for signs that we could be moving into correction or pullback mode. All right, so it is still a stock market driven by the MAG7 stocks, QQQ, and the technology sector, if you want to put in a third. Those three remain strong. They remain the leaders, and I have yet to see any underlying weakness to warrant concern, as in a breakdown in breadth to signal maybe the market is shifting from bull to bear. Right now, we're still net bullish on the NASDAQ 100. We're overbought on QQQ. That is a concern. That has the yellow caution light out. But I've yet to get a downward shift in momentum or something to signal that we're moving into pullback or corrective move. But I will be watching that. Take a trial to TrendInvestorPro.com for part 2 of this report. Thanks a lot for tuning in and have a great weekend.